Hello and welcome to another edition of Market Briefing. I'm Martin Bakkerdax, European business editor here at the IB Times UK. Well, it is indeed a central bank-dominated financial market day. We had key activity from three of the biggest banks in the world today. It began out in Japan, where the outgoing Bank of Japan Governor Masahiro Shirakawa gave his final address to investors, effectively snuffing out a bit of a rally for the Nikkei 225. It went past 12,000 at one stage for the first time since 2008, but really a reluctance to go full bore with asset purchases kind of pulled investors back from the brink. That's going to change, of course, with the new regime at the BOJ, but for the moment, the rally did seem to be snuffed out. Now, that was similar here in Europe, where we're testing multi-year highs, both for the FTSE, which is at a 5-year high, and broader indices across the European region. Now, we had two key central bank interest rate decisions, no change, either from the Bank of England or the European Central Bank, either in key lending or deposit rates, or indeed any of the extraordinary measures that are already in place. Now, that doesn't mean that either central bank is completely confident about the growth prospects for their respective economies. Certainly, there's a lot to be concerned about. Here in the United Kingdom, of course, there's faster than anticipated inflation, and that's going to likely remain the case for another 2 to 3 years, and there's moribund growth. If we do avoid triple-dip recession, it will be by the barest of margins. In Europe, the conditions are even perhaps more stark. Italy, of course, is in the midst of a political dogfight, which is entering its third week with no government for the third largest economy in the region. And perhaps more crucially, we're seeing divergence that we've never seen before in the Eurozone with respect to growth prospects. That was made starkly evident earlier this morning when we saw unemployment data from France. 10.6%, the first time it's been over 10% since they adopted the single currency, and record high youth unemployment as well. When you compare that to Germany, where the unemployment rate is 6.9% and only a tenth higher than the lowest it's ever been since German reunification, you can see why investors are concerned not about a 2-speed Europe anymore, but about a 3 and perhaps 4-speed Europe, in which Germany outpaces those around the core, and the core outpaces the countries around the periphery. So that all needs to be watched by investors quite carefully, and you can understand why they're taking a little bit of risk off the table. Sterling is a little bit higher after no change from the Bank of England, as is the euro, and bonds haven't really changed that much. It'll be curious to see what ECB President Mario Draghi has to say about all this in his monthly press conference. But for the moment, investors are really watching many other things, including the results of the non-farm payroll report, which will be delivered by the U.S. Labor Department tomorrow. That's it for us here at the IB Times TV. We'll see you tomorrow.